Today we are looking at inducement. This is a very important topic that will help you take a well-refined entries from the extreme points and avoid the traps market places on the chart. We're going to go to the screen now and I'll show you how to point them out and also how to avoid them. You know the drill, guys. Let's head to the chart. All right, traders, we're going to start today by pointing out the meaning of inducement first. I've been able to draft out a quick explanation on what inducement means, and this is what we have here. Inducement levels are areas in the market where liquidity is engineered to lure traders into making wrong decisions, often leading to stop hunts before the real move happens. Understanding and avoiding them is crucial in smart money concept trading. So like I said, that this is a simple topic but very important, because most traders, you can see what we have here, it lures traders into making the wrong decision, often leading to stop hunts before the real move happens. So if you don't understand and also learn how to avoid this, most of the times you may see yourself taking entries from inducement levels and then market will clear you before moving to your direction. That is where you will see price stopping you out and then moving to your direction, and you may be wondering what is going on exactly. And I know you must have seen something like this. Let me quickly give an illustration before we go to the chart. Let's say you pointed out a break of structure like this and you're waiting for price, following our strategy, you're waiting for price to come back into this particular zone, and then when price was about to come back into the zone, we got another break of structure to the upside. Most of the times this level is what shows up as the inducement, and some traders may think, okay, this is a new structure, let them start buying from here, and at the end of the day price may tap in, behave as if it's about to move to your direction and then clear you out to go to the white point and then move to the intended direction. So in today's video you're going to learn how to actually avoid this and also trade from the right point. Sometimes price can still come to inducement and then push and keep going, but what you need to ask yourself is, if I keep taking trades from inducement all the time, how will my trading results be? So we're going to go to the chart now and I'll show you guys how to point that out. So I was able to backtest gold from January, so let's go to the extreme level. So from here I was able to point out where inducement showed up on the charts, how it tricked traders and what actually happened. So I'm going to show you guys how I pointed them out and also how you can avoid it. Now this is the first one on the list. So from here we got a break of structure. Following our strategy, this is the origin we'll be waiting for price to tap into before moving to our direction. And you can see price indeed came back into that origin and then dished out a massive push to the upside. But then what happened before that? We got this break of structure. Now from this point, this was where price was trying to retrace back into this origin, and from there it created a new break of structure to the upside. Now this new break of structure has created an inducement, and most traders will map this out thinking it's the right demand zone, that this one is no longer valid. And you can see price tapped in there, dished out little movement to the upside, giving everyone hope that the movement is about to take off from here, and then price retraced, cleared everyone out, this forming an inducement liquidity, cleared everyone out and then tapped into the white origin before dishing out the massive push to the upside. Now when you see this, how will you know the one that is an inducement and the one that is not an inducement? That is when you pick up your Fib2. And now when picking up your Fib2, look at the point where price took off from and where it retraced from. So now this is a buying scenario. Here we're going to start from this swing low to the swing high. Now any origin that is around 0.5 or 0.618 is an inducement level. You need to pay attention to the level or the origin that is around 0.79, which is this one. That is the premium or the discount level. Now that we are buying, that is the discount level, and that is where you wait for price to tap into before going to your direction. It requires patience. Most traders, they don't want to wait, and a lot of them will get lured into this particular zone and then price will clear everyone. Now inducement shows up because price wants to generate liquidity before bringing out the intended movement. So stay away from inducement levels or you will fall into all the traps markets will create. So going further, this was a break of structure. You can see levels, price did not come back into this particular origin. So if I'm to take trades from this particular level now, this is the point I'll be looking to take trades from. And you can also see that an inducement level has been created here. So I'm not going to pay attention to this. I will only point this out as my liquidity level, and I'll be waiting for price to come in. But you can see price didn't come back to this particular level. So let's keep moving forward. Now, this is another example. We got this break of structure, and after getting this impulsive movement, a clean break of structure, and then before price came back into the origin, look at what was happening above here. We also got another break of structure to the upside. That is a BOS. Another break of structure to the upside. Now, a lot of traders would also want to take a buy from here. So you can see price tapped in and dished out tiny movements, but it did retraced all the way down to the main origin before dishing out the correct movement. So moving forward, I still mapped this out. This is another example. A break of structure here. This is a tiny one. And then we also have another break of structure at this level. So this particular point will trick a lot of traders into taking a buy here, thinking that this level is no longer valid and price may not come back to that level. And you can see what happened. Price tapped in. You know, the funny thing is that price will always tap in and then behave as if it's about to push to your direction, and then it will clear you out, because a lot of traders will place their buy here, stop loss a little bit below, which simply means a lot of liquidity will be sitting here, and you can see how it cleared everyone out before dishing out the main movement. So remember, all you just need to do is pick your fib tool, put it from the swing low to the swing high. If it's a sell, you put it from the swing high to the swing low, and then pay attention to the origin that is around 0.79. Let me quickly show you guys my fib settings so that you can also use that to set yours. So this is my fib settings. You can see this is my fib settings. You can see everything I turned on, which is this one. So quickly take a screenshot and then set yours. So let's keep moving forward. We also have another inducement level here. Still same example. So this being the origin that caused this particular break of structure, we got a break of structure here to the upside. This particular level tricked a lot of traders into placing a buy, and then price ended up coming back into the right origin and dishing out the right movement. Now, another thing you need to point out is you can see the type of movement price dishes out whenever it taps into the right origin, and type of movement it brings out when price is reacting from an inducement level. So the right origin will always push out the massive movement to the direction we are looking at, and then the inducement level will just dish out the little movement just to trick traders into thinking that that level will hold, and then it will clear you out. This is also another example here, a break of structure and then FVG. Here price tapped into an FVG and also push to the direction, but that's not what we are looking at. You should pay attention to the inducement level price also created here. Now you can see the massive break of structure here. A lot of traders will be placing their buys here, waiting for price to come and push to the upside from this point, and you can see how everyone got cleared out and price returned back into the extreme level and still pushed to the direction. So you can also see what we have here. Same thing, break of structure, you map out the origin, then price created an inducement level here. Also having in mind that all these inducement levels are also form of liquidity, because once they are present, they are liquidities that you should wait for price to sweep before tapping into your origin. So I have a lot of them here. So you can also see a break of structure, price tapped into the right origin, clearing out the inducement. You can see the inducement level here. A break of structure, price tapped into the inducement level, dished out a little movement and cleared. Another one, break of structure, inducement level created, price tapped in, a little movement, cleared it to the downside, and then pushed to the direction after tapping into the right origin. Same thing here. Now this is the current point I'll be waiting to sell XAUSD as I'm shooting this video. So you can see the inducement level price has also created a break of structure to the downside. So I won't be looking to sell from here. Instead, I'll be looking to sell from here. So this is more like my liquidity point, because I'm seeing this as an inducement liquidity. So I'm expecting price to clear everything here, tap me in, and still push to my direction. So that is how simple you keep it. Avoid the rush. Once you point out liquidity or inducement levels, wait for price to get to the right origin. Don't try to rush in to catch the movement. Don't rush to lose money. Use your fib tool when there are a lot of origins, and then use the origin that is very close to 0.79. That is how you can keep it simple. Wait for price to sweep liquidity before tapping into your origin. Alright guys, so take it easy. Thanks for watching, and make sure you practice, understand the strategy well before you start trading in your live account. proper risk management is always advised. So if you want to get my course, it's very simple. Check the description. You will see my WhatsApp number there. You can message me or you can visit the website. Bye for now. I'll see you on the next one.